Nuburu Inc., trading under the ticker symbol BURU on the NYSE American, is currently priced at 0.19 USD, reflecting a slight intraday increase of 0.00060 or 0.31% so far today, January 12, 2026. While the broader market might be looking at the latest swings in Nvidia stock or the relative safety of Apple stock, savvy investors tracking the microcap space are focused on the quiet but massive structural shift happening within this Denver-based laser specialist. At a glance, a 19-cent stock looks like a typical high-risk gamble found on the Robinhood app or through various online investing sites, but the reality is that Nuburu is currently executing a complex transformation from a pure-play hardware manufacturer into a diversified defense and security hub. This creates an intense tension between the market's expectation of a struggling penny stock and the reality of a company that is aggressively rolling up Italian defense technology to build a vertically integrated platform. Today's minor price tick is the calm before what the company itself has described as a pivotal execution phase throughout this month. The general belief among casual observers using a SoFi active investing platform or their Fidelity mobile app is that Nuburu is a niche company struggling to commercialize its blue laser technology in the industrial sector. For years, the story was about welding copper for electric vehicle batteries, a promising market, but one that has been slow to provide the consistent, high-volume revenue needed to sustain a public company. The expectation was that Nuburu would eventually fade away or be absorbed for its patents. However, the reality that is starting to leak into the trading data on the Interactive Brokers platform is a complete strategic pivot. By creating Nuburu Defense LLC and securing a $25 million financing package from YAIIPN, the company has effectively declared its intent to stop playing purely in the industrial sandbox and start competing in the multi-billion-dollar electronic warfare and operational resilience fields. This is a massive shift in narrative that most retail investors have yet to fully price in, creating a curiosity loop for those who look beyond the surface level of an individual brokerage account. Common ground for most investors is the understanding that laser technology is critical for the future of manufacturing. But the contrarian take here is that the real value of Nuburu's blue laser, which operates at a 450 nanometer wavelength, is not just in how it welds metal, but in how it integrates into the defense infrastructure of the future. While traditional fiber lasers are absorbed poorly by reflective metals like copper and gold, blue lasers are absorbed at a rate nearly 20 times higher. This physics advantage translates to better efficiency and less heat-affected zone damage. In a defense context, this applies to everything from directed energy weapons to 3D printing spare parts in theater. If you are managing your own portfolio through self-investing or using Schwab Intelligent Portfolios, you have to ask yourself if the market is accurately valuing the patents behind this physics advantage or just looking at the current lack of a massive revenue stream. The recent movement in BURU is heavily tied to a series of strategic milestones scheduled for this very month. We are currently watching for the formalization of the Techne SPA partnership. This isn't just a handshake deal. It involves a network contract for joint industrial activities and Nuburu taking an equity stake in an Italian firm that builds special mission vehicles and electronic warfare systems. For an investor using Interactive Brokers trading tools, the significance of Techne lies in its existing contracts, such as the $6.6 million government agency contract in Bangladesh they recently supported. By tying itself to Techne, Nuburu is gaining a foothold in NATO-aligned defense markets that would have been impossible to reach as a standalone American hardware firm. This is the reality that is currently clashing with the expectation of a company that is just a penny stock play. Furthermore, the company is moving toward effective control of Orbit SRL, an Italian software firm specializing in operational resilience. This is a crucial piece of the puzzle. Most people who invest online think of Nuburu as a hardware company, but by acquiring Orbit, they are adding a SaaS revenue model to the mix. Orbit software helps organizations manage disruptions across physical and digital environments, a capability that is being prioritized by the U.S. Department of Defense and NATO. The projections for Orbit suggest a rapid revenue acceleration from roughly $3.2 million this year to nearly $20 million by 2028. If you are tracking this through a Fidelity brokerage account or a SoFi stocks, you have to realize that consolidating this software revenue could fundamentally change the EBITDA profile of the parent company. It shifts the valuation from a multiple of hardware sales to a much higher multiple of recurring software revenue. The trading volumes we are seeing today, while modest compared to the giants like Tesla stock, show a high degree of retail participation. The Robinhood stock trading community often looks for these low-priced names for high-leverage moves, but the institutional side is where the real story is hidden. The securities purchase agreement with YAIIPN includes a $25 million unsecured debenture. This provides the financial strengthening that the company has been talking about for months. It's expensive capital, yes, but it is capital that allows them to close the Lycon acquisition and fund the Maddox Defense joint venture. These are not small moves. Maddox Defense is a well-known name in the UAV and tactical equipment space. A joint venture focusing on dual-use drone solutions and deployable additive manufacturing would put Nuburu lasers directly onto the front lines of modern conflict. Comment below how many shares of BURU you currently hold, or if you think the shift into defense is enough to save the stock from its current price levels. Now, we have to talk about the business model and the history because that is where the skepticism comes from. Founded in 2015, Nuburu was built on the idea that the blue laser was the missing link in high-performance industrial manufacturing. They proved the technology, but the path to scale was rocky. They faced NYSE American listing compliance issues and had to overhaul their leadership, bringing in Alessandro Zamboni as executive chairman to lead this transformation. The old reports showed a company with a current ratio of 0.27 and short-term obligations that far exceeded its liquid assets. This is why the stock is sitting at 0.19 USD today. The market is pricing in the fear of bankruptcy and the constant threat of dilution. On December 24th, they filed for an offering of up to 230 million shares by selling stockholders. For anyone using Fidelity Investments or SoFi investing, that kind of potential dilution is a massive red flag. However, this is where the expectation versus reality framing becomes most important. The expectation is that the 230 million shares will hit the market and crush the price. The reality is that these shares are often part of the structured financing needed to execute the acquisitions of companies like Orbit and Lycon. If those acquisitions bring in $20 to $30 million in high-margin revenue over the next 18 months, the dilution might be a price worth paying for survival and growth. This is the intelligent portfolio approach, looking at the net effect of the capital raise rather than just the share count. If you are looking for investment help or researching the best investing sites, you will see that microcap transformations like this are among the most volatile and misunderstood plays in the entire market. The institutional activity is shifting as well. We are seeing insiders buying shares on the open market, which is usually a sign of confidence. 8 different insiders have been active recently, which contrasts sharply with the sell signals coming from technical moving averages. When the math says sell, but the insiders say buy, you have to look deeper. The reality is that the company is trying to stay above the NYSE American's minimum requirements while they wait for these new defense revenues to hit the financial statements. If they can consolidate Orbit and Lycon this quarter, the Q1 and Q2 reports in 2026 could look drastically different from the weak gross profit margins reported in the past. The future outlook for Nuburu is entirely dependent on this January execution phase. If they formalize the Techne deal, finalize the Orbit control, and sign the Maddox Defense joint venture by the end of the month, they will have successfully built a defense and security hub from the ground up. The catalysts are almost weekly at this point. Any announcement of a direct contract with a defense agency or a new dual-use application for their laser technology could act as a massive tailwind. Conversely, the risk is that the capital from YAIIPN isn't enough to bridge the gap to profitability, or that the dilution from the share offerings becomes too heavy for the retail base to support. Whether you use Robinhood fractional shares or trade large blocks through Interactive Broker's account, you are effectively betting on the management's ability to integrate these 4 different companies into a cohesive unit. For a smart friend looking at this over coffee, the takeaway is that Nuburu is no longer just a laser company. It is a venture capital-style roll-up play disguised as a penny stock. The $0.19 USD price point reflects a company that the market has almost given up on, while the strategic activities reflect a company that is just getting started in a high-growth sector. This gap between expectation and reality is exactly where the biggest opportunities and the biggest risks are found. If you are using Fidelity Wealth Management or a SoFi robo-advisor, you probably won't find BURU in your safe buckets. But for those who manage an individual brokerage and have a high tolerance for volatility, the next 3 weeks will determine if this transformation is a success. In summary, the movement we see today, a tiny 0.31% nudge, is a reflection of a market waiting for confirmation.